Hello everyone, welcome to my YouTube channel and welcome to Trades by Advait. The reason why I created this market update series is because I wanted to give you a weekly update on all the analysis, all the recent developments, all the learnings that I have done and my future outlook going forward. So right now, as we can see over here in the title, we are at a very important tipping point. And from here, a lot of people are predicting a lot of crash, and are we going to go sideways or is it going to be a digestion? So we are going to uncover all these details, and we are going to analyze the probability of such thing happening, and I'm going to share my rationale and my reasons of why I think the way I think. So without further ado, let's start the analysis video and let's start to talk about the markets. So before we delve deep into the analysis, I wanted to announce that, and I'm thrilled to announce that now I have also launched a brand new WhatsApp channel. So the feedback that I got and what I've observed is a lot of people don't have a lot of time watching entire YouTube videos, and a lot of people want constant updates, very fast without lag updates. So for me, I create weekly videos. I create one video at least 5 to 6 days a week. And then what happens is a lot of events happen, and then there's no way for me to inform you urgently. So WhatsApp has a brand new feature called as channels, and I update a lot of it in the textual form and in the easy to consume and easy to produce form. I have put the link in the description below, and you can join the WhatsApp channel to get the most fastest update. Now, the other feedback that I got from people is, your shorts and your long form content must have captions. And I have incorporated all these captions so that for the people who are, watching and analyzing charts, they can now have, more visibility and more understanding about the words that I say and the emphasis that I put on my speech. So as you can see below, right now, this video has the, captions in the live time, and it will emphasize the exact word that I'm speaking so that you don't have to, keep a track of, the exact words. Now, the reason why I'm doing this is because I want to improve the customer experience and the viewers experience, and I want, my viewers to be easy on their brain to digest all the information. So that's the bigger vision that I have. So you will see constant improvement, in terms of videos, in terms of delivery. But yeah, these are the two main updates, and I'm thrilled to launch these. Now, let's go to the markets and let's talk about the markets. In this macroeconomic section, I wanted to discuss few important points that are relevant not only for today, but for a lot of coming months. And the first point is in the last 2 weeks, we have seen a lot of names reporting, big names like Salesforce, Dell, Snowflake, etc. Now, why do these guys matter? Salesforce, Dell, and other companies are big on AI, and when they report earnings, people like us tend to get an idea of where the AI is going and how much AI is bringing in terms of revenue, in terms of profit, and all those things. So looking at the earnings of Salesforce, Dell, and also Snowflake, all of these stocks literally went down 10, 20, 30% after reporting their earnings. So apparently the AI revolution or the AI saga is taking a step back. It is taking a hit. So these earnings are really a good indication of what AI has in store for us. So it's a good time to realize that the spending in AI cannot continue like just like this. So it's kind of having or going to a stagnation phase, but we will have to see and we will have to watch like how much difference is the AI bringing in the top line of the organization. Because if AI cannot bring the huge difference in revenue and in bottom line, then eventually the spending is going to dry up. So I'm keeping a close eye not only on Nvidia, not only on Supermicro, but also on the other players who are supporting this AI revolution. So that's my take on the recent earnings. The next point that I wanted to discuss is the crude oil. So remember, crude oil, it touched 80 and 88 level, in last 2 months, but then it sustainably came down to 62 or 66, and now again it is on the rise and it is stabilizing at around $78. So the reason why I am discussing crude oil is because a lot of inflation is dependent on the price of this commodity. It is also called as liquid gold for a reason. And the reason is very simple. If the price of crude oil grows high, then so does all the other commodities and all the other products and services in the economy will go high. So this is a good sign that, in past 2 months, crude oil has come down and it is stabilizing under $80. If it goes above $80, then that would be a concerning sign, because we will see the numbers in the next month's inflation numbers. So for crude oil to stabilize at 78 is a very welcoming gesture. I love that, but keep a close eye on this commodity. Speaking about inflation, last week we had CPI data release, that is consumer price inflation, and it came in at 3.4 year over year, and it was forecasted to come at 3.5. So this is a very welcoming gesture. Like, inflation is not coming high as expected or as forecasted, but at the same time it is also being sticky. It is also not leaving the three handle. So it is coming at 3.5, 3.4, 3.2. So this is a sticky nature of inflation, and this is a stagflation scenario which people were talking about, that the last mile of inflation is going to be difficult to beat. So the Fed's target is 2%, but right now the CPI is at 3.4%. So there is very little incentive for the Fed to cut or even to think about cutting, because we had the speech of Fed Chairman Jerome Powell last week, and he still insists that he needs more confidence that the trajectory of inflation is downwards. So he is willing to keep the monetary policy at restrictive levels, that is Fed funds rate at 5.25 to 5.5%, as long as he thinks that as long as he has that confidence that okay, now the inflation is in the downward trajectory and it would be appropriate to loosen the policy. So he is in no hurry by any means, and he is steadfast on his goal of 2%. So that's was his take on the nutshell about the FOMC meeting last week. The Fed has decided to keep the rate unchanged, that is 5.25 to 5.5% in this meeting, which was not a shocker, because we already knew going into the FOMC meeting. We already had our eyes on the Fed Watch tool that I have discussed on and on again on this channel. So the Fed Watch tool is very, very easy and important tool to actually know what the policy rate will be in coming, let's say, few months. So it keeps on changing, but at least you come to know, or you have a fair idea of what the market is pricing in. So that's why I use Fed Watch tool. And then finally, the point that I wanted to discuss is markets are touching all-time highs. Markets are making new highs, and the reason is markets are pricing in a dream soft landing scenario. So what do I mean by this? Right now, when we started the year, we started with an anticipation that markets will have 7 rate cuts. Then we started with an anticipation that we'll have 2, and now we are not even thinking of 1 rate cut. So right now, markets are pricing in a dream scenario of a soft landing, wherein Fed is the scenario where Fed has successfully tamed down inflation to 2% without breaking something, without causing a significant damage to labor market. So that is what I define, or that is what is called as soft landing. So apparently market is pricing in, or market is anticipating this dream scenario where inflation is going to go drastically down without hurting the labor market. And that is what you are seeing on the stock markets, because they are making new all-time highs, and all the narrative is positive right now. But you never know, it can quickly change, and how and why it can change, I'm going to discuss that in the coming sections of the video. So that's my take on the macroeconomic front, all the recent developments, and my thinking and my process of rationale behind why I say what I say. So now let's turn our attention to the technical analysis of this video, starting from the weekly time frame, where I discuss important levels of Nasdaq futures and then also for the correlated assets like QQQ. So now let us analyze the weekly time frame. In the weekly time frame, I'm going to discuss the support levels, the resistance levels, and some key observations that I have done. So this is the weekly charts, as you can see over here on the screen. All these are the Fibonacci levels, all these are the volumes, and these are candlestick charts. So in these candlestick charts, the first thing that I wanted to discuss is the resistance. And the resistance is still sitting at 20,650 levels on the NASDAQ. Why do I say this? It is because this level corresponds to 1.618 level of the Fibonacci ratio. So as you can see for those who are new to the channel, we have plotted a Fibonacci pattern from the top of 2021 and till the bottom of 2022. And as you can see, like these levels of 1.618 ideally should act as a good resistance point. So, and that exact level is 20,650. Now, if you talk about the immediate support, then the immediate support is sitting at 5-day EMA. And as you can see, the maximum volume has taken place over here, that is near the 5-day EMA. Now, in the 5-day EMA, it is very important for the markets to hold the 5-day EMA. And the reason why I'm telling you this is because this is a high volume node. And if we have broken out with, all-time highs with higher volume, then that would be a very good sign. But for some reason, if we are not able to hold the 19,000 levels, then that would be a start of concern or a start of trend reversal. So one other thing that I wanted to point out is we are breaking out on unfortunately lower volumes. So why do I say this? The reason why I say this is because you can see all the prior weeks we had a lot of volumes. So in 1 week we had 3.3 million, 3.6 million, 4.1 million contracts that are being traded. But as you can see on this week, that is the week of June 10th, this week we only traded 2.154 million. So 4 million as opposed to 2 million contracts is very small. Now that can be, it can be a reason that this week it was a contract switch week. So, that because of that contract switch, it is not reflecting it into the numbers. But anyways, the volume is less when we are going forward. So this is not a good sign. Ideally, what should happen is we should go higher with higher volume, because that is another sign of confirmation about the participation of maximum, members in the market. So that's one key observation. But yeah, regarding the resistance, the only resistance that I can see is the top of the Bollinger Band and the 1.618 level, that is 20,650 level. The 20,000 level is going to be a psychological resistance because we are, touching 20K. So that is, all about the resistance. Regarding the support, the 5-day EMA and the 1.414 level over here should ideally act as a good support. So that is, my weekly analysis on the NASDAQ futures. So the support, and right now the markets are, grinding upwards slowly. So, there's no cause for concern. But yeah, these are the important levels to keep an eye on. So that's my take on the weekly time frame technical analysis. Coming on to the daily time frame analysis, I wanted to discuss the important support and resistance levels on the daily time frame, and I also wanted to discuss some key important points that I'm looking for in the charts. So without further ado, let's go to the charts. So this is the daily time frame chart. And as you can see, after the geopolitical crisis between Israel and Hamas, we had a 8.33% correction. And then from that point itself, we had a monstrous rally. So as you can see over here, we are approaching a very critical point of resistance over here on the daily time frame, especially when we consider pivot points. So R2 is sitting at 19,970, that is almost 20K. So R2 resistance levels is directly coinciding with the 20K psychological resistance. So as you can see, since last 2 days, we have not, been able to close above the R2 level. So this point will be a very crucial to watch, like if we can give back-to-back closes above the 20,000 levels. So that would be a really good point of resistance. Talking about the support, the blue line that you can see over here, this is the first line of defense. So if market decides to pull back, then this would be the first thing that is going to be tested, that is the 5-day EMA. So that's the blue line that you see over here. And regarding the month to date, the white line that you see over here is the month to date anchored VWAP. So let's say markets decides to pull back a little bit, then the near term support is going to be provided by 5-day EMA, and the ultimate term support is going to be provided by the anchored VWAP, that is the white line that you see over here. So the level of 5-day EMA is still sitting at 19,600, and the level of anchored VWAP is still sitting at around 19,000 levels. So keep a close eye on these levels. Now, the important thing that I wanted to talk on the daily time frame is we have switched from the June contract to the September contract. So as you can see over here, there is a very heavy discrepancy in the volume. That is over here. You can see the NQM 2024 is changed to NQU 2024. That is from the June contract expiry to the September contract expiry. So make sure that all the day traders, all the futures traders trade the most recent contract so that you can get the best amount of liquidity and you're trading the latest contract. So that's a key thing to update into your trading portal, into your so the technical term for that is rollover. So normally make sure that you do automatic rollover so that your trading portal keeps a track of the futures contracts and it does it automatically for you, so that you place the trade to the latest contract. So this was a small update. Right now we are sitting at a very tipping point wherein there is a lot of resistance ahead. So yeah, these are the resistance and these are the support, because yeah, next week I don't think that it's going to be a huge pullback week because we have a short week. So more on that later. But on the daily time frame, I don't see any technical issues. All I see is we are approaching a very critical and very strong resistance point. So I'm expecting a pullback, let's say 2 to 3% in the coming weeks, but nothing severe than that. If anything changes in the economic front, then I'll definitely let you know. But next week is going to be very, very sideways or a digestion week. So in this section, let us briefly go over the anchored VWAP charts and the newly added anchors that I have plotted on my charts, which are significant. So let's go to the charts and let me show you what I mean. They are the anchored VWAP charts, and as you can see over here, like right now, the price action is way above all the anchors. So if you look at the pure price action charts, then there is a lot of support below the price action. So we are way overextended on the upside, if I may say. But as you can see right now, there is no cause to concern, because right now what do they say in the markets? Enjoy the rally while it lasts. So right now the bulls are winning, and enjoy the rally while it lasts. So that's the key thing over here. The only thing that I want you guys to note is I have added the PPI data anchor release over here, that is the white line, and I have also added the 31st May's low anchor, which was a 4% pullback, and that is the color of that is this line, that is the blue or the cyan line that you see. So those are the two important additions in the existing anchors, and I have explained like all the events and why I have plotted these anchors, and I have color coded them. So take an advantage, take a screenshot and see, and all the levels are in the left right side of the pan, that is this one. So I highly recommend screenshot or take a note of these levels, because what I have seen in my trading journey, like the most important indicator that I have come across is the anchored VWAPs. And a lot of times, as you can see in the history as well, on April 19th, the market exactly stopped at the anchor of October lows. So these are not just mere lines. The market respect these lines. So and when I say respect, it means like a majority of market participants are using this and believing this as the support. So this is where it is coming from. So these are my I would say tidy looking anchored VWAP chart explaining all of these things. So right now the price action is above all the anchors, so right now everything is bullish. But as I said, from the traditional charts, that is this one, daily charts, we are sitting at a critical resistance. So every type of chart has its own significance. So the reason why I'm keeping these charts is this layout is telling me something different, this layout is telling me something different, so we can learn from each and every incoming data. So that's the point of me sharing different types of charts and different types of indicators. So anchored VWAP tells you a lot about the resistance and support based on the volume and based on the cumulative participants. These things pivot levels are purely based on statistics. So I try to incorporate my analysis and then deduce my inference and bring that in front of you so that you can have a simplified version of my analysis, and then you can take your own informed decision. So this is in a nutshell what I'm doing in regards to the anchored VWAP charts. And do let me know in the comments if you want a access to these charts, or let's say screenshot of these charts with the levels, and I would be happy and I would love to do so. So that's my take on the anchored VWAP charts. And now let's move on to the next section of the video. So I just wanted to point out that a lot of you are on the equity side of the markets. So you deal in the ETFs like QQQ. So I wanted to point out an important level for the QQQ where the market is approaching. So QQQ is going to have a strong resistance at 484 level, and let me show you why by going into the charts. So as you can see over here, these are the standard, QQQ charts. And as you can see over here, the QQQ is coming or approaching the 484 level, which also happens to be the R2 level. That is the resistance level in the, pivot indicators in the daily time frame. So keep a close eye on the 484 level next week. If we approach that and if we touch that, then there is very high probability or high chance that we may, take a breather. We may take a small pullback from the 484 levels. So keep a close eye on that. And for the QQQ, the support is going to be this blue line, that is the 5-day EMA. One other thing that I wanted to point out is the VIX, the volatility index. And as we are seeing a prolonged period of, a very stable, non-volatile period, and that is reflecting in the price of the VIX. So if you can see over here, right now, the VIX is trading at almost 1266. So it is dangerously, low VIX that we are, moving around. So keep a close eye on the VIX levels as and when we are, on a daily closing basis. If we close a lot, below the average of the VIX, then there is a high chance that we may see a spike. So keep a close eye on this VIX. Right now, we are trading at historically low levels. If you look at the entire 2024, any time the VIX has touched a lowest level like these, it has given a, spike. Now that spike may be higher, maybe very big spike, maybe small spike, but at least we know for sure that if the VIX is so much lower, then there is a high chance of, a volatility spike. So keep that in mind. So now let me make my stand very, very crystal clear about where I stand in front of, the Fed funds rate scenario. So my key takeaway from this is two ways. If you think in terms of game theory, then there are only two possible outcomes. One is Fed cuts the rate due to the right reasons. So what do I mean by this? When I say Fed cuts the rate for the right reasons, I mean that they are successful in taming down inflation to 2%, and then they are doing so by keeping or without hurting the job market or the labor market. So that is scenario number one. Scenario number two is if something breaks in the economy and if you see a systemic risk, then the Fed will ease its monetary policy stance and then reduce the rates. So the reduction in the rates is constant, but the reason for that reduction has to be different. So that's where the policy rate and that's where the rationale comes into picture. So if you look at every other recession since the very recent past, in last 2 decades, what happened in the dot-com bubble or the tech bubble is when the Feds started cutting the rates, it started cutting the rates due to wrong reasons. The labor market was heavily impacted, and Fed was forced to ease the monetary policy. So that was the wrong reason for cutting the rates, right? If you go to the Lehman Brothers crisis or the mortgage crisis, that's exactly what happened. Fed and by the way, coincidentally, Lehman Brothers at the time of 2008 or 2009 crash was the Fed funds rate were the same, like 5.25 to 5.5% at that rate, which is right now. So like the scenario in which the Fed is forced to cut the rate because the economy is having a systemic risk, or maybe if there is something breaking in the economy, is not a good reason to cut the rates. So if Fed is successful in engineering a soft landing, and if they can do so without damaging the labor market, then this would be the first time or a very unique scenario in which Fed successfully did that. Now, Coming to the dynamics of Fed Chair Powell. So remember that when the pandemic started, he has already been wrong once, and that too massively wrong. So at the start, he mentioned the word transitory for inflation. Now, if he says, inflation is transitory and still we get 9% or 8% inflation rating, so he has already been wrong once. Now, if he cuts the rate and then inflation surges back again, then he will be wrong twice in the same tenure. So that is a very big risk that Fed Chair Powell is, facing. So I am of the opinion that Fed will be very concerned that they shouldn't be wrong twice. So that, because if they do that, then that would raise the credibility concern, because they are having, hundreds of PhDs in the Federal Reserve and they have been wrong consistently twice, then that would literally, create a cracks in the trust system of American people. So I don't think Fed Chair Powell wants to be wrong twice. So that is why he is steadfast on his stance that he is in no hurry to cut the interest rates. He wants greater confidence, and only then he will start loosening the monetary policy. Now, in doing that, there is a systemic risk of something breaking. But as I said, as market analyst or as a informed individual, as a rational person, all the risk to the markets are in the chaos or in the unknown. So nobody knew in tech bubble times, like, markets is going to crash 60%. Nobody knew that Lehman Brothers are going to be bankrupt and, there will be a massive crash. So the same way, nobody knew last year that Silicon Valley Bank, Silvergate Bank, all of those banks will go bankrupt. There will be bank runs. Nobody knew. So the point that I'm trying to make is the unknown risk to the system is nobody knows that. So it's fool's theory to predict that. So rather, I would play a game theory, most pragmatic way, in which I will calculate that, okay, if the Fed doesn't cut the rates just before inflation, just before elections, because they want to sound themselves as apolitical, then there is a very low probability that Fed is going to cut rates this year, at least only one rate cut after the elections. And if they do so, then they increase the risk of something breaking in the economy, because the more prolonged rate cuts gets, the more risk is to the economy of something breaking. So it would be a very interesting time and very interesting thing to observe in our lifetime, that if Fed is successful, then this would be the first time in the history that Fed evaded recession, even after having a so high inverted yield curve, so high interest rates. So that would be an incredible feat to achieve. But as an informed trader or as an informed individual, it is my duty to bring forward these points to you, so that you can take informed decisions. Coming on to the AI revolution, as we have seen from the recent companies like Snowflake, like Dell, like CRM, that is Salesforce, the AI revolution is taking a breather. Now, the thing is, the capex spending in the chips is very, very high, and it is one time. No company is going to invest $20 billion every quarter just in infrastructure. So that is a thing to watch. Now, the difference between, in markets, people say that, this time it's different. So this time is indeed different. Why? Because in tech bubble, you have seen, low revenue, zero revenue, no net profit, nothing. But as opposed to today's time in AI revolution, there are a lot of companies which are making actual profits. For example, Nvidia, for example, Supermicro, for example, Microsoft, and for example, Apple, who are trying to make a difference in the revenue or make a difference in the bottom line by using or incorporating AI. So the true good effects of AI are yet to be seen in terms of subsequent quarters to actually judge that is AI adoption resulting in the increase of the top line significantly or not. So that would be decided in subsequent quarters. But as of now, the promise is such that AI should be able to make companies more efficient and should be able to give investors a boost that they are going to increase or they are going to result in increasing the revenue and the bottom line by at least 20-25%, because only then you can justify such high spending in the infrastructure. So that's my take on normal macroeconomic and other diverse topics. I hope you get a lot of value from it. I would love to hear your opinions in the comments. So yeah, now I would like to wrap up this session and go to the next topic of this video, and the final one. As far as commodities are concerned, the last point and probably one of the key insightful points of this video is you can see that crude oil prices have not significantly gone down even after the voluntarily cuts that the OPEC have made. Now, who is OPEC? OPEC is Organization of Petroleum Exporting, countries. So they are, an official cartel, if I may, to actually, stabilize and, control the crude oil prices around the world. And the leader being Saudi Arabia and Russia. So OPEC essentially did production cuts in 2022, in 2023, and also in 2024. And now they are extending the production cuts, voluntary production cuts by the end of 2024. So my key thesis is, if they are extending the production cuts and still if the crude oil price is not exceeding 85, 90 or $100 per barrel, that speaks a lot about the economic slowdown. Because if they are doing so much production cuts and if the crude oil is not going down, ideally what should happen is, in an ideal world, if the OPEC announces production cuts or voluntarily production cuts, then the price of crude oil should shoot up. Now, the very fact that the price of crude oil is not shooting up, which means the demand is, softening. If the demand is softening, then we can conclusively infer that the economies are gradually slowing. Because if economy is, boosting and economy is so damn well, then why in the hell the demand for the crude oil is not going up? So that's, my rationale. Like there are signs of economies slowing all over the globe, and which is very evident in the crude oil prices despite of such heavy production cuts. So and remember, one of the largest producers of crude oil, Russia, is being sanctioned so much. So even after sanctioning Russia, even after restricting the supply, even after all those restrictions, if the crude oil is not hitting $100 or $90 a barrel, then that speaks a tons about the real on ground situation on the economy, which is conclusively slowing. So that's my take on the macroeconomic commodity side update. Now let me go to the economic calendar for the next week. So as you guys know, like next week there is a holiday of Juneteenth. So it is going to be a shortened trading week, and also there is no major news data releases next week, but there is always a lot of Fed speakers are going to speak. So remember, last week we had FOMC meeting and the Fed chair Jerome Powell had his press conference. So this week we are going to have a lot of other Fed board members who are going to give interviews and who are going to give speeches. The only thing that I want to share through my trading experience is whether or not the markets only need one reason to fall. So do not take this Fed speakers speeches lightly, because they are going to speak all around the week. And last time what happened is Fed Kashkari, which happens to be a non-voting member of the Fed in terms of interest rate policy, when he started speaking, the market went crashing down. So don't take any of the Fed officials' speeches lightly if you are an intraday trader. So make sure that if you are in the position, make sure that you're not in the position while the Fed speakers are speaking. So that's my take on the strategic impact of the economic calendar for the next week. So yeah, apart from that, it's going to be a shortened trading week, so volumes are going to be low, and also you won't see any massive price fluctuations. So yeah, it's summertime, so enjoy, and that's what you'll see in the markets. So I want to sum it up for everything, the entire video. So in summary, 20K is going to be the psychological resistance for Nasdaq futures, and right now markets are at a very crucial tipping point, and that is why we are approaching a lot of important fib levels that I have discussed in the past in this video. So feel free to take a screenshot, feel free to take a note, and that's a key in the nutshell. So I would like to take this opportunity to thank all of you for sticking around, watching this video, and I would love to hear your thoughts in the comments, and please feel free to like, subscribe, and share, because that gives me a lot of motivation to do this. I do this for my soul. I do my trading for my dinner, so it's one for the dinner and one for the soul, and I want to share genuine, unbiased my opinions on the markets, my research research. So feel free to explore other platforms as well where I have my digital presence, for example, YouTube, Instagram, and WhatsApp. Everywhere my name is the same, Trades by Advait. You'll find all the links down in the description below. So yeah, happy trading, happy investing, keep learning, keep growing, and keep trading. I'll see you guys in the next video.